Now imagine a world here where you can invest with total confidence and do so regardless of whether the market is soaring or tumbling. Imagine a strategy that takes the stress completely out of trying to time the market and replace it instead with a disciplined approach and one that guarantees that your money is working for you every step of the way. Are you ready to unlock the secret to building long-term wealth? Get ready to discover a strategy that has stood the test of time. It's revolutionized the way people invest, and it's paving the way to financial success. You're going to want to stick around for this one, folks. All right, so welcome back to the VIP Financial Education YouTube channel. We help you go further, faster, financially. In today's episode, we're going to be exploring an investment strategy known as dollar cost averaging and how it can actually help you build wealth over time. Let's go ahead and dive right in. Now, dollar cost averaging is a method of investing that involves consistently investing a fixed amount of money at regular intervals. And you do so regardless of the market's ups and downs. This strategy allows investors to buy more shares when prices are low and fewer shares, of course, when the prices are higher. To help you understand how this works, let's go ahead and take a look at a real life example. I want you to meet Sarah. She decided to invest $500 every month in a mutual fund through a dollar cost averaging approach. In month one, the mutual fund costs $10, so Sarah buys 50 shares. In month two, the price drops to $8 per share, allowing her to purchase 62 and a half shares. In month three, the price goes up to $12 per share, resulting in only a 41.67 share purchase. And by continuing this strategy over time, Sarah accumulates a significant number of shares, benefiting from both market downturns and upturns. Dollar cost averaging offers several benefits for you long-term investors. First, it eliminates the need to time the market. Instead of trying to predict the best entry points, investors consistently invest over time, reducing the impact of short-term market fluctuations. Many successful investors, including myself and some household names, embrace dollar cost averaging. Two notable examples include Warren Buffett and John Bogle. Now, Warren Buffett, one of the most successful and famous investors of all time, he's long embraced the principles of dollar cost averaging in his investment strategies. Although he didn't explicitly rely on a regular fixed investment amount, his approach of consistently investing in quality companies over the long term is akin to the concept of dollar cost averaging. Buffett's strategies involves buying shares of companies that he believes are undervalued and holding them for the long term, regardless of short-term market fluctuations. By taking a patient and disciplined approach, he actually has been able to accumulate substantial wealth over time, famously. Now, Buffett's success can really be attributed to his ability to identify companies with strong fundamentals and competitive advantages. So he aims to invest in businesses that have a very solid long-term prospect and then holds on to his investments even during market downturns. By consistently investing in quality companies and holding them for the long haul, Buffett's been able to take advantage of dollar cost averaging principles. During market downturns, he's used these opportunities to accumulate more shares of his preferred companies at lower prices. As the market recovers and these companies thrive, his investments appreciate in value. Now, Buffett's approach emphasizes the importance of having a long-term disciplined perspective, investing in businesses rather than trying to time the market. And he just remains patient even during market turbulence. These principles align with the core tenets of dollar cost averaging and have been instrumental in his ability to generate billions of dollars in wealth over time. Let's talk about John Bogle. He's the late founder of Vanguard Group and a prominent figure in the world of investing. And he was another strong advocate of dollar cost averaging. Bogle's contribution to the investment industry includes the creation of the first index mutual fund, which aligns with the principles of dollar cost averaging as well. Bogle believed in the power of consistent long-term investing and minimizing costs. And he encouraged investors to adopt a disciplined approach through dollar cost averaging by regularly investing in low-cost index funds. And by investing in index funds which track a broad market index like the S&P 500, Bogle was able to provide investors with a way to achieve diversification and participate in the overall market's returns. Now, Bogle's philosophy, it really centered around the belief that trying to beat the market consistently through active trading and market timing was too challenging, and most investors would benefit from a passive long-term investment approach. He emphasized the importance of reducing costs, as fees and expenses can eat into the investment returns over time also. Now, by consistently investing in low-cost index funds, Bogle believed that investors could benefit from the long-term growth of the overall market. And this approach allowed investors to take advantage of dollar cost averaging as they contributed then their investments regularly, regardless of the fluctuations that might be seen in the market. Bogle's advocacy for dollar cost averaging and passive investing has had a truly profound impact on the investment industry. It's empowering individuals to build wealth by consistently and intelligently investing over the long term. Now, to go ahead and wrap up today's video, dollar cost averaging is a solid strategy for building wealth. By consistently investing a fixed amount over time, investors can benefit from market fluctuations and achieve financial goals. Now, remember, investing involves risks, and it's important to consult with a financial advisor or do thorough research on your own before making any investment decisions. My question to you is, are you already using dollar cost averaging in your investment strategies? Tell me where you're investing. Go ahead and let us know in the comments below. Join the conversation. Always love to hear your ideas. Some of the best ideas on this channel have come directly from you guys. Also, check out some of the other dollar cost averaging calculators that are online. These resources are great in showing you just how much of a difference this strategy can make to your investing goals. I'm going to go ahead and include some of those links in the description for you below. Thanks, as always, for watching today's video, my friend. Don't forget to like and subscribe, of course, and please share the video with anybody that you think would benefit from it. Until next time, make it a great day and keep on cash flowing. See you soon.